10 alarming reasons why Walmart is starting to fall apart before our eyes. Hey, what's up guys? It's your favorite channel, back with another eye-opening video for you. Today we're going to talk about one of the biggest retail giants in the world, Walmart. You may have heard about its recent financial struggles, and let me tell you, it's not looking good. In fact, there are 10 alarming reasons why Walmart is starting to fall apart before our eyes. From declining sales and profits to failing to adapt to new market trends, there are many factors contributing to Walmart's downfall, and it's not just about the company itself. Walmart's struggles could have a significant impact on the economy as a whole. So if you're a fan of Walmart or just interested in the world of retail, this video is a must-watch. We'll break down the 10 reasons why Walmart is in trouble and what it could mean for the future of the company and the economy. So, grab a snack, sit back, and let's dive into the alarming reality of Walmart's current situation. One of the most alarming reasons why Walmart is starting to fall apart is due to its significant decline in profits. According to recent reports, Walmart's profits have dropped by almost a quarter compared to a year ago. This is a significant loss for the world's largest retailer, which translates to billions of dollars in financial struggles. In addition to this, the company did not generate any cash from operations in the last quarter, resulting in a negative free cash flow of $7.3 billion. Investors are also concerned about Walmart's future prospects, with earnings falling short of the 25% growth sought by investors. The company's projected sales growth for the final quarter of 2022 seems unimpressive, despite an average of 10% monthly sales growth over the past 3 years. All of these factors indicate that Walmart's traditional business model is showing persistent signs of weakness, both in the US and overseas, and the company may be failing to adapt to new market trends. These challenges could potentially lead to a downward spiral for Walmart, making it the latest leading retailer to fall from boom to bust. Another reason why Walmart is starting to fall apart is its negative free cash flow, which indicates that the company is not generating enough cash to cover its expenses. In the past quarter, Walmart didn't generate any cash from its operations, instead consuming $3.8 billion. Coupled with $3.5 billion in capital spending, Walmart's free cash flow for Q3 was a dishearteningly negative $7.3 billion. This is a significant concern for the company, as free cash flow is an important indicator of a company's financial health. Walmart's negative free cash flow suggests that it may not have enough money to invest in future growth, pay off debts, or distribute dividends to shareholders. This could make the company less attractive to investors, who may be looking for profitable companies with strong cash flows. If Walmart fails to improve its cash flow situation, it could face even more financial struggles in the future, putting the company's long-term survival in jeopardy. The financial troubles for Walmart continue as earnings have fallen by an average of 4.5% over the past 3 quarters, which is significantly lower than the 25% growth sought by investors. This downward trend in earnings is a clear indication that Walmart is not performing well in the current market, and it has failed to keep up with the competition. Walmart's struggles are not just limited to earnings growth, but also in sales. Despite an average monthly sales growth of 10% over the past 3 years, the projected 4% sales growth for the final quarter of 2022 seems unimpressive to investors. Walmart's inability to meet the expected growth targets is a major cause for concern, as it indicates a lack of competitiveness and inability to adapt to market trends. If Walmart cannot turn this trend around and provide better returns to investors, it could lead to a further decline in its stock price and long-term financial viability. Walmart's projected 4% sales growth for the final quarter of 2022 is raising concerns among investors, given that the retail giant's monthly sales have grown by an average of 10% over the past 3 years. This low projected growth rate suggests that Walmart is facing significant challenges in meeting its sales targets, which could negatively impact its overall financial performance. Moreover, Walmart's inability to keep up with e-commerce competitors and adapt to changing market trends is putting the retailer at a disadvantage. As consumers increasingly turn to online shopping, Walmart's traditional business model is showing persistent signs of weakness, both in the US and overseas. If Walmart fails to adapt to these changing market trends, it may face fierce competition from e-commerce giants, which could further dent its sales growth and revenue. In the end, Walmart's disappointing sales growth and projections are an ominous sign of the company's declining fortunes and a potential harbinger of more difficult times ahead. Investors are currently viewing Walmart stock as a no-buy, suggesting that they lack confidence in the company's ability to bounce back from its financial struggles. The retailer's earnings have fallen by an average of 4.5% over the past 3 quarters, which is well short of the 25% growth sought by investors. Moreover, Walmart's failure to generate any cash from operations in the past quarter, instead consuming $3.8 billion, has resulted in a dishearteningly negative free cash flow of $7.3 billion. These factors, combined with the company's projected 4% sales growth for the final quarter of 2022 are raising concerns among investors about Walmart's future prospects. As e-commerce continues to grow in popularity, Walmart's traditional brick-and-mortar business model is showing persistent signs of weakness. Unless the retailer can adapt to changing market trends, it may struggle to compete with its online rivals and continue to lose market share. Ultimately, the lack of confidence among investors is a worrying sign for Walmart's future growth prospects. Despite its position as the world's largest retailer, Walmart's traditional business model is showing signs of weakness both in the US and overseas. The company is struggling to adapt to new market trends and changing consumer behaviors, and is facing stiff competition from e-commerce giants like Amazon. In recent years, Walmart has been slow to invest in e-commerce and digital technologies, which has put it at a disadvantage compared to its competitors. In addition, the rise of smaller, more specialized retailers has challenged Walmart's dominance in certain product categories. As a result, the company's sales growth has been lackluster, and investors are becoming increasingly concerned about its ability to remain competitive in the long run. Unless Walmart can find a way to innovate and stay ahead of the curve, it may face an uncertain future in an increasingly crowded and challenging retail landscape. Walmart's struggle to adapt to the changing market landscape could be one of its biggest downfalls. E-commerce competitors like Amazon and Target are making significant strides in the retail space, while Walmart is still heavily reliant on its traditional brick-and-mortar business model. The company's slow adoption of e-commerce combined with its failure to create a strong online presence has put it at a disadvantage in the increasingly digital world of retail. In addition, Walmart's reputation has also taken a hit due to ethical and labor issues, which could affect its ability to attract and retain customers. As consumers become more socially conscious and concerned with the practices of the companies they support, Walmart's history of questionable labor practices and lack of commitment to sustainability could drive customers away to more socially responsible competitors. If Walmart fails to adapt to the changing market and address these issues, it may face a downward spiral and become just another victim of the retail apocalypse. Walmart's most recent earnings report was a major disappointment, with the company experiencing significant losses that could have wider implications for the economy. This report suggests that Walmart is facing a series of defeats that could have major implications for American consumers and the economy at large. If Walmart is unable to adapt to new market trends and continue to attract customers, it may be at risk of falling into a downward spiral that could be difficult to escape. Given the company's size and significance in the retail industry, this would be a major blow to the economy as a whole. As such, it is imperative that Walmart takes steps to address its financial struggles and find new ways to remain competitive in an ever-changing market. With Walmart's financial struggles, negative cash flow, and lackluster sales growth, it's clear that the company is facing significant challenges. Investors are losing confidence in the company's ability to adapt to changing market trends and compete with e-commerce giants. Walmart's traditional business model is showing signs of weakness both in the US and overseas, which is concerning given the current economic climate. The recent earnings report has been a major disappointment for both the company and American consumers, and it's unclear whether Walmart can bounce back. The projected 4% sales growth for the final quarter of 2022 seems unimpressive, especially considering the average monthly sales growth of 10% over the past 3 years. All of these factors suggest that Walmart could be on the verge of collapse, and if it fails to adapt quickly, it could join the ranks of other leading retailers that have fallen from grace in recent years. Walmart's financial struggles are not occurring in isolation. The retailer's downward spiral is indicative of larger economic issues that could have significant implications for other companies and industries. Walmart is one of the largest employers in the United States, and its struggles could lead to job losses and a decrease in consumer spending. Moreover, Walmart's reliance on low-cost products may indicate a broader trend of consumers tightening their belts in the face of a slowing economy. If Walmart continues to suffer, other retailers may also face difficulties, leading to a ripple effect throughout the economy. The company's struggles are a warning sign that policymakers and business leaders must take seriously and address promptly. Thanks for watching. If you found this video helpful, please consider giving it a like and subscribing to our channel for more content like this. Don't forget to leave a comment and let us know what you thought. See you in the next one.